Hello, today is Sunday. It is the 11th day of August 2013, and welcome to today's chart analysis video. Before we start this, I want to go on a quick off-topic subject. It is the month of August, which for football is fantasy football season as the drafts come into play. If you're like myself, a fantasy football geek and or fantasy football guru, and you want to participate in any of the same leagues that I am, all these leagues are free, nothing to win other than bragging rights itself. But tonight I will be participating in a 20-team draft 1 year on Yahoo Fantasy Football. If you're interested in that, please send me a YouTube message with your email address. And as well, 2 weeks from today on Flea Flicker, I will be participating in an inaugural Keeper League of 12 teams. If you're interested in that, again, please send me your email address as well as which country that you are living in, and I can get you all set up within that league. Okay, so that's enough about that. Let's now go over these charts. And what do we see? Well, the 18 average is sideways to an up basis. Sideways, obvious because you can just draw a line like that. Up basis because, well, the 18 average of lows, making a high, going sideways. It's an okay up basis. Even the 18 average of highs doing about the same thing as well. So you can say it's neutral with an up bias, but we're also in a downtrend. So there's your down bias as well. So we'll just say right now, until you have a significant breakout or a significant breakdown, this chart is neutral. So therefore, in between 19, even 1875 and about 21 is neutral. Plain and simple. But as far as looking at this chart as it plays out, last week I talked about this outside day. This was Friday of last week. An outside day is where you make a high on that period that was higher than the previous day high. It was also higher than several of the previous day's highs. It's when you made a low that was lower than the previous day. It was also lower than several of the previous day's lows. So it was a significant day. Oftentimes it means some sort of big move is about to take place. Well, after that period came into play on the Monday and Tuesday session of this week, two red candles where collectively with both days, the high was significantly lower than Friday and the low was significantly higher than Friday's day as well. So you followed an outside day with a double inside day. Interestingly, on Wednesday, you can see that this low barely took out the Friday low. And then we've had nice rallies ever since, breaking this previous high. So is this move lower going to be that failed breakdown before it goes higher? Maybe. We've already talked about what the next key level is, and that's really 2150. But for this bear market to end, as well as a start of a new bull market to begin, what I want to see, or pretty much need to see, is for it to establish resistance significantly higher than this level. And 2150 would be that first area where you would expect it. And by making it up to 2150, say, what you need to see happen is, one, not have much or any resistance at this level and extend the gain significantly even higher than that. So assuming tonight or tomorrow morning it makes a move to that level, and then within that time or within the next 24 hours it continues to go higher, maybe even breaking 22, then you might say to yourself, okay, wait a second here. We've just managed to have a 10% gain in a couple of days, maybe a 15% gain in 3 days. Maybe this thing, the bull market has started / bear market ended. Now, another thing or more common situation is to come up and establish resistance. Again, significantly higher than the previous high, By doing such, the 18 average of band would start to come in a nice rising session. Then ideally what you'd want to see is this resistance area become support, thus pull back, meet up in this area here of the low 20s, 20 and a half area, and find support with the rising band. And then when you break the resistance that is established, so again, assuming it goes up to say 2160, we'll say, come back down to 2050, so it goes down $1.10 from that point, and then breaking by that resistance. At that time, I would say it looks like the bear market intermediate term that started almost a year ago, 3/4 of a year ago now, is now over. And therefore, a new bull market looks likely to begin. May I also point out, too, that when you have a nice bullish setup in play, and we see it right now, after all, it is, you're looking for right now a break above this level. It was a penny and a half short on Friday. And it's the highest close since this day in here. It's the third day since the breakdown that it has held and stayed a day above 20, as this day, and this day were all the days staying above 20. It's looking really good. But when you have a bullish setup that doesn't break free and go bullish, oftentimes failed moves can create fast moves in the opposite direction. So a failure for a bull market to come through would mean, of course, that you'd have at least a test of this level of 1821, but most likely a break below. But that's only, of course, if it's a failed breakout period. So that'll be it for today's video. Again, if you're interested in fantasy football, please send me an email on YouTube with your email address, and I will send you an invite. The draft again for tonight is 8:30 p.m. Eastern Time, and then, of course, 2 weeks from tonight is a keeper league. Thank you for tuning in, and have yourself a great day. Bye-bye.